I'm told we've got the management of Amber Enterprises. They reported, well, 30% jump top line numbers up until the December quarter, but the Q3 has not been that great. So let's try and get the management to talk about how the near-term outlook could be like. Chairman and CEO Jasbir Singh joins us right now on the show. Mr. Singh, thanks so much for joining in. 9-month numbers may look great. Q3, I think, fairly disappointing. Revenues down about 64% as well. And why this YOY fall in revenues?
No, there's no YOY fall in the revenue. In fact, if you see 9 months number, it's 28% jump in the revenue.
Right.
And we are very much on track. Company is doing good. There's a robust demand in the air conditioners. There's quite uptake, and new customers have been added. New products have been added. So this 28% jump in revenue, as compared to last 9 months number is what we have reported, and we're moving ahead on the same lines.
Right. Mr. Singh, good morning. 28% jump in terms of your revenues when you compare the 9-month numbers. And I guess the profitability too has been pretty good. You've already surpassed the FY17 profit figure, which was reported. Could you tell us what has led to this sort of growth? What was the capacity utilization? I think the jump on the top line has come in on back of higher volumes.
Yes, that's right. So, it's largely because of the operating leverage. Our expenses did not go up, whereas, the whole gross margin got converted into profits. So we have delivered a good PAT numbers right now as compared to the last year. And even if you see on the EBITDA side, there's almost about 54% jump because of the operating leverage.
Mr. Singh, if you could highlight a bit on your finance cost. You raised 475 crore from the IPO. I'm not including the offer for sale here. And I guess that money was to be deployed towards payment of your debt. How much has been repaid, and what is the debt which is still sitting on the books?
So out of 475, 400 crore was supposed to go for the debt repayment, which has already been done. And 75 crore was general corporate purpose. So that is being consumed gradually. So it's the whole 400 crore which has been repaid to all the banks. So it's virtually right now it's a very less debt which we are sitting on.
What is the net debt now on the books after repaying 400 crores?
So term loan is almost negligible, the long-term loan, and the CC limits right now being utilized is hardly 30-35 crores.
Mr. Singh, having done what you've done, what's the expectation now for FY19 over FY18? Surely you have a roadmap of the kind of growth that you want to clock in over the course of the next few years. But let's just focus on FY19.
See, as a policy, I would like to refrain on giving the forward-looking numbers. But,
exact number, but a broad estimate?
So I'll just, I'll just give you a brief on the historical trends. So industry has grown by almost, CAGR of industry has been about 11 to 12%, and we have done 19 to 20%. And we will continue, on the same numbers in case the industry. So industry is growing at around 10% this year. So I think looking into the historical trends, we should be able to map up the same kind of deliveries on the numbers of 20% growth.
Okay. I'm afraid we've got a slightly patchy line, Mr. Singh, but thanks so much for taking the time out and speaking with us today and giving us your thoughts.